Hey everyone, it's David Duford here at Final Expense Agent Mentor and Mortgage Protection Agent Mentor. In today's video, I'm going to give you a total breakdown on how to sell $250,000 a year in mortgage protection business. Most likely you're watching this video because you're interested in selling mortgage protection, or maybe you are now, and you're looking for strategies to employ in your own business to ensure that you make the kind of money that would excite you and change your life dramatically, but you're not sure how you can hit a huge number like $250,000 in mortgage protection business. So the purpose of this video is to give you some instructional aspects to determining how you can look down from big picture to small picture and know what you specifically can accomplish on a daily and weekly basis to hit that large annual number of $250,000 in mortgage protection insurance. So let's go ahead and get started. What we're going to talk about are 4 different aspects of how to do this particular approach to business. I'm going to break down things numerically for you. I'm going to tell you what you're going to need to do on a lead basis. And we're going to use some more or less assumptions in product size or annual premium amounts, the number of appointments you set off your leads, and mathematically deduce what you can expect under a good agent's normal operational numbers. This is not, the numbers I'm going to show you, not based off of an elite producing agent and not for somebody who doesn't work hard enough either. So these are going to be numbers that I would expect from somebody who works through the mortgage protection sales system that I teach, somebody who buys leads on a regular basis and has enough people to see. So your first tip here is to break down your big goals into daily and weekly goals. This is really, really important. When you first look at the idea of selling $250,000 in mortgage protection business, it may seem somewhat scary to hit. I mean, that's a lot of business. But once you begin to break down first by monthly goals and then eventually by weekly and daily goals, what you can go and intend to accomplish, then you realize that this is actually something that can be achieved, assuming you've got the right constraints in mind. So what I'm going to do now is take you to my screen and show you some numbers as to how to determine this. Okay, so what you see on here is in advanced technology. You're seeing the calculator and the notepad for Windows. So when we look at $250,000 in premium, that is pretty big of a number. So what we have to account for, first of all, is how much can we actually do in a year's worth of time. So the first place to start is to look at this a little bit more on a regular, more recurring basis. So if we divide this by 12 months, we get a monthly number of $20,000 or $20,833 in annualized premium. Again, if we go down further and do this on a 4-week month basis, that gives us $5,208. Now this, by design, should allow us to have about 2 weeks of vacation built in, because some months have more weeks and more days. But more or less what we're looking at is about $5,208 in weekly premium to sell. So let's say you actually sell mortgage protection 4 days a week you're in the field. How much business do you need to write on a 4-day week basis in order to hit this business? So if we divide this number, which is a weekly basis, by 4 working days in the field, what we're looking at is only $1,300 in premium, thereabouts. Now the nice thing about mortgage protection is that the premium sizes are usually a lot better than other life insurance products like Final Expense. My experience has been mortgage protection generally averages around $800 in annualized premium. So if we take that $1,300 number and then divide it by $800 in annualized premium, this gives us 1.63 policies a day that you have to hit in order to hit your $5,200 a week number. So if we make this a little bit more clear, if we look on a weekly basis of how many policies you have to hit, you're going to have to sell around 6 to 7 policies a week on an average $800 persistency or $800 annualized premium basis. So the next thing you need to figure out is how many leads do you have to work in order to hit that 6 or 7 policies a week number. Okay, so now that we know what our AP goal is, and we know what our weekly AP volume goal is, we got to determine how many leads a week we need to have in order to hit the financial goal that we have. So most agents are going to take typically around 20 leads a week that are full-time in the mortgage protection business. So out of 20 leads, the best mortgage protection agents will set somewhere between 50 to 60, maybe 70% of the leads. So let's take 60% as the average. So 20 leads times 60% is 12 appointments. So good mortgage protection agents, when they get an appointment and they see the people, will close somewhere between 50, 60, maybe even 70% of the actual sits that they do. The other aspect that's nice about mortgage protection is you will sell a lot of these people because you will have husband and wife couples as well. So many times you go in the house and you'll sell 2 policies, not just 1. So your app volume tends to be a little bit better than if you're working older people and many of those people are widows and there's just 1 person. So again, we're back here at the production calculator. We're at 12 appointments a week off of 20 leads. And if we're going to close, let's say 60% of these, we're going to close 60% of the presentations we see. We just take 12 and multiply by 0.6. And that gives us, just rounded down, 7 policies a week, which is enough to hit our annual production goal. So what you're seeing here is a summary of what I just talked about. I just want to take you through this again one more time to give you an idea of how we can arrive at $250,000 in production in mortgage protection business in a year. So our first goal there is $250,000. We've put that goal down in writing. Our weekly AP goal, if we divide everything by 12 months and then have 4-week months, is $5,200 in production. That gives us an average daily AP goal. If we do 4 days a week in the field at $1,300 AP, our average annualized premium per case tends to be around $800 in annualized premium, which gives us a weekly app volume goal of 7, and that's derived by dividing 800 into 52, and it's off, it's not exact, but it's close enough. Weekly lead volume would be, for a full-time agent, 20 leads a week is a good number, and based on conversion averages for a good person on the phone, not necessarily the best, is about 60%, and that means 12 appointments in which, if a good agent, again, not a great agent, not a bad agent either, is going to close 60% of those, or better defined as app to leads conversion ratio. And what that means is take your total leads and then take the total number of applications and divide that, which means you're going to convert out of those presentations somewhere between around 7 applications for every 20 leads that you buy. Now, there's some other factors you have to consider here too. Of course, I haven't had a discussion about persistency. I haven't had a discussion about lead cost. I haven't had a discussion about commission levels. These have important influences on what you actually bank, because at the end of the day, what we're looking at here is just production numbers. And I think production numbers are important to gear you in the right direction. But ultimately, you're going to have to figure out what kind of leads you need to buy. You're going to have to determine if your commission levels are good. And you're going to have to make sure that you're writing quality business that's not lapsomatic business. So just to kind of give you some idea of what I would consider to be good on these numbers. First of all, persistency should be well over 90%. You're selling insurance to working people that usually have jobs, so you're not going to find that they're losing their jobs and thus dropping your coverage. And if you do a good job of selling to the need and basing it around what they're comfortable paying, it should be well above 90%. Lead-wise is going to depend on what kind of lead programs you use and where you spend your money. Generally speaking, to get 20 leads a week, you're probably going to pay around $700 to $1,000 a week. That is something I would expect based off of results, response rates, averages, and where fixed pricing is for direct mail mortgage protection leads. And then lastly, commission levels. This is a big one. You want to make sure you're working with an organization that optimizes your commissions. It doesn't cut you short in order to feed the multi-level marketing scheme that may have recruited you. So good commission levels, depending on the product, depending where you're selling, 80, 90, 100%, 110% even are really good numbers to potentially start off with, depending on the company. And as you get experience, it should slightly go higher than that too. Definitely should be over 100% for all of your products, with the few exceptions and maybe some price leaders that are really cheap that you'd only use to bust up pricing to try to replace existing business. So to summarize the last 3 points real quick and how to goal set for $250,000 in mortgage protection is, first of all, as you can see, I showed you a bunch of numbers just a minute ago. You got to know your numbers, okay? Everybody's numbers are going to be unique. I'm just giving you a template to operate off and see how you can connect your ideas and dreams to an actual reality that you implement on a daily basis. So what you need to start doing is tracking your own numbers. As you sit down and call for appointments to set mortgage protection appointments, as you run through appointments, as you do everything that you're doing, you need to track your production numbers. You need to track the number of leads you're purchasing, appointment set ratio, apps to leads ratio. You need to, of course, track what your persistency is, how much you're investing a week into your business, and you need to be able to start averaging what your average case size is. I know in final expense, where I have the most experience, the average case size is $600 in annualized premium. Mine is lower. I average about $525 to $535. I know guys that average $800 in final expense. A lot of it depends on how you sell and where you sell. Some markets are going to be better than others, and you'll have that influence too in your own business. But again, you can see the main thing here is there is a structure that you can implement, a system of success to put into place and follow. As long as you're rigorously following it, then you'll find you'll get results. And that leads to point 3. You've got to religiously focus on your daily goals. The old saying, one step in the journey of 1,000 miles begins with one step, and it's true. You cannot expect to hit those annual goals without daily religious commitment to a daily goal. And your daily goal here is very simple. If you're going to get 12 appointments and you're going to spread them out over 4 days, that means your goal in life is to always set 3 appointments off of a 4-day work week, okay? You cannot go out in the field unless you have 3 days booked. You cannot stop calling unless you have 3 appointments booked each day. You have got to be committed to making that happen. You got to be committed to making sure your 20 leads are there too as well to give you the leverage to hit those goals if your ratios are as how I described them. If you start to slack on these daily goals, even if you have 2 a day instead of 3, that is a 50% reduction, right? So if you go from 12 or 3 a day to 2 a day over 4 days, so 12 to 8, it's a third reduction, but that's a third reduction in your commissions. That's a substantial decrease. And little tiny changes like that add up to big numbers of loss or big numbers of gains. So be committed to calling and doing whatever it takes is humanly possible to hit those numbers. Be obsessed with them. Also be obsessed with your production goals. Now I'll tell you from reality's experience, you won't always sell 2 policies a day. That's about what you would expect over a 4-day work week is you need to sell 2 policies, right? If you're going to sell 7 policies over 4 days, it's about 2 a day, give or take. You won't always do that. Maybe some days you'll blink, and then on the weekly basis you'll hit, maybe you'll hit 8 still because you sold 4 on Thursday and 4 on Friday, for example. One good agent told me once, you got to be obsessed with the process and not the results. That's why it's more important to be obsessed with, I've got the leads, check. I've got the ability to set appointments, check. And I know I need to set 3 a day over a 4-day work week. Because generally speaking, if your numbers are what they are, and you know what they are and you've gotten experience and you've tracked them, they will tend to play out the same over time if there's been enough time to develop those numbers. Meaning, as long as you hit your appointment goals, you're going to see your production goals come around too as well. Number 4, and this is the most important point, I didn't quite understand this until later on in my life, you've got to decide to be successful. You got to decide for yourself that this goal is meaningful and significant, and now that you've seen the way to do it, you're going to stop at nothing from accomplishing it. And that means you got to pay the price. I hear Grant Cardone talk about this. I hear Brian Tracy talk about paying the price. And what that means is you've got to be totally committed and understand that by taking a stand and committing yourself to this goal, you're going to have to do without other things. If you're going to work 4 days a week and you know what it takes to sell mortgage protection, you're going to have to not do other activities as well. You're going to need buy-in support from your spouse, your kids, your family. And if your goal is to hit this awesome goal and have really awesome commissions and production quality, you've got to be totally bought into it. You got to be able to control your emotions and your mindset to make sure that you follow through in this goal because it's significant and meaningful. But it doesn't mean you won't run into doubts along the way. It doesn't mean that you won't run into frustrations along the way. Because everything I'm showing you is all great on paper. But if you've been in any insurance sales business in your life, you're going to come up against difficulties. Things don't necessarily work out exactly how you want them on a daily or even weekly basis. but a commitment to the long term, paying that price. Generally, things tend to turn out, and you've got to be able to emotionally and mentally commit to that. And that's a lot easier said than done, but that's what paying the price is all about. Hey, I hope you enjoyed this training. My name is David Duford. I'm the owner and operator of Final Expense Agent Mentor and Mortgage Protection Agent Mentor. What I do in my business is recruit agents that want to go in either direction selling insurance. If you like the idea of selling mortgage protection, I coach and mentor agents to be successful, helping them develop a system of sales, marketing, prospecting, so they can see these kind of numbers that I've described. And if this is something you're interested in and you'd like to talk to me more about how to join my agency to see if it's a right fit for you, here's what you need to do. Go to mortgageprotectionagentmentor.com, click the contact box, and send me a message. I'll be happy to describe to you what the process is in working together mutually. If you like this video, please like it. Also subscribe if you haven't. I do a lot of videos like this on a regular basis. And feel free to leave comments or questions below. I like fielding answers to people who ask questions. My name is David Duford, and thank you so much again for watching. Take care.